Hey guys, Hector Daville. I just want to very briefly talk about areas of support and resistance, and please mind that I say areas instead of levels of support and resistance. Okay, this is something that we've already seen on a previous video. I just wanted to wrap it up very quickly. All right, areas are basically multiple swing points topping or bottoming out around the same level, but not quite exactly right to the pip to the same price point. All right, so if we have a price formation like that where price finds a resistance or support, okay, the opposite holds true as well, around the same area, but those levels don't quite line up to the very same price point, that's okay. As I always say, the markets are not perfect, all right, but at any rate we can certainly define this entire area as an area of resistance instead of a level. Okay, now most of the times those areas are established briefly by the candle wicks. Okay, that means that the reason as of why sometimes they overshoot a specific price level is because we have a candle there and the wick kind of overshoots that area, and therefore, well, blurring out this very specific price level that we had previously determined, and now, well, we kind of have to take in consideration the entire section. All right, just because some traders will mark this level, some others will mark these levels, and some others will mark that level, depending on where price tops out, wherever they place or they draw their levels of support and resistance. That's entirely okay. Different traders, well, regard areas in a different way, and therefore it's safer to simply mark, like I say, a whole buffer area instead of one specific price points. Okay, but again, remember that most of the time those levels are breached temporarily just by the candle wicks, instead of price simply breaking and beginning to print entire candles, with multiple candle closes above that specific level of resistance. Okay, more often than not, again, is simply the candle wick shooting above that level, and immediately after price comes back down once again. If that's the case, then I repeat, we have to determine that this level is still in place. It's just not 100% exact. Okay? Moreover, and I'm going to address a question that I get asked over the email a number of times. No, it's just impossible to determine a specific distance in pips that we can allocate to that buffer area. All right, we can determine one specific distance in pips, like for example, the area should be of maximum, I don't know, let's say 50 or 40 pips, because it depends on how volatile that currency pair is. It depends on the time frame we are looking into. The daily, an area of support and resistance in the daily will be certainly tighter than an area in the monthly time frame. Okay, just because price movements in the monthly time frame are certainly longer, right? And therefore any buffer area of support and resistance is also meant to be longer or wider. All right, so like I say, impossible to establish a specific distance in pips. It's something that you have to determine from a visual point of view. Okay, as long as all those levels more or less come in line, okay, around the same area, all right, we can certainly establish the entire area as support or resistance. Now, as far as marking them, as far as drawing them in your chart, I personally simply mark them as with one, as one unique level with one unique line. All right, somewhere in between all price swings, but remember that there will always be a buffer both above and below that specific level. So if you have these three price peaks, okay, these three price swing tops, and despite the fact that they don't quite all come to the same to the same level right to the pip, I simply, I simplify things. I simply draw one specific line, trying to more or less get it somewhere in between all those price levels, and I simply make a mental note knowing that there is a little bit of a buffer both to the downside and to the upside. So once price begins to trend up again and, well, retraces up to that area, I know that I can't expect price to find a reaction or at least any market reaction right to the pip, right on that price level. Instead, I know that that reaction may come down here or may come up here, but at any rate, this entire area should be marked as a hot area, okay, as an area of market reaction. All right. So regardless of whether we get a bounce of that area or a breakout altogether, at any rate, that reaction will not necessarily happen at this price point, but at anywhere within a sensible buffer area, both to the upside and to the downside. All right, and needless to say, you are to treat, to analyze, and to implement those areas of support and resistance pretty much the same way as if they were exact levels. Just keeping in mind that they may not be 100% accurate. That's all. But the actual implementation on your charts and on your trading methodology should be exactly the same. Anyway, guys, like I said, just a quick video that I wanted to get off my chest to wrap up a little bit areas of support and resistance. They do happen often, and they are not really that different from levels of support and resistance. Just treat them both in the same way. Cheers.